Good afternoon, everyone, and thank you for joining this event, Transforming Engagement in Financial Services. The event is co-hosted by the Chartered Banker Institute and the charity Finance Innovation Lab, where I work as Head of Policy and Advocacy. If I haven't met you before, then hello, I'm Marlise Nichols, and I'm going to be chairing the event today. During the session, which will last about an hour, we're going to be exploring a question that is very close to my heart, but also objectively important and timely. And that is, how can civil society have a greater voice in financial services? Now, for those of you wondering what is civil society, we're referring to the organisations and people who work outside of the private sector and outside of government, but who can represent the public interest. So we're speaking about consumer advocacy organisations, charities, consumer groups, and community groups, and so on. Now, despite civil society having important knowledge about the impacts of financial regulation and finance on people and the planet, there's a gross imbalance in the voice of civil society in policymaking. I think we'll hear a lot more about this on the call today, but just to give you some examples, over 90% of regulation consultation responses submitted are typically from firms rather than from civil society groups. And currently, the Prudential Regulation Authority doesn't have a legal obligation to consult civil society organisations, whereas it does for firms. Now, as I'm sure you're aware, post-Brexit, the rules governing financial policy and regulation are undergoing a fundamental review. That's happening through the so-called Future Regulatory Framework Review, which will be the cornerstone of the upcoming Financial Services and Markets Bill. This could really be an opportunity to address the problem of unbalanced stakeholder input and to improve public accountability. There's some government support for this. For example, it's been acknowledged that any policy-making process risks being deficient if it doesn't draw sufficiently on the views, experience, and expertise of those who might be impacted by regulation. And as I hope we'll hear today, there's some regulatory buy-in as well. So the event today aims to raise awareness of the need for people and communities as citizens and consumers to have a voice in the future of finance. And we want to generate and build support for ideas to make that happen. And we're going to be touching on the role that professional bodies can play in this too. During the live webcast, if you're joining us right now, there'll be a chance to ask our panelists questions. So please do use the Q&A function. We'll have about 10 to 15 minutes at the end of the hour to put those to the panelists. And just finally, please note that this event is being recorded. So to kick off the discussion today, we're delighted to be joined by Senior Regulator Victoria Supporter. Victoria is an Executive Director at the Prudential Regulation Authority, or PRA, where she's leading the Bank of England's work on the future regulatory framework. So we're really interested to hear her views on the role of civil society in the future of finance. Now, I know that Victoria can't stay for the Q&A today, but she's really keen to hear your questions. So do submit any questions you might have and we'll pass those on after the event. So over to you, Victoria. Thanks for joining.
Thanks very much, Marlise, and for organising the interesting event and inviting me. So, good afternoon. As Marla said, my name is Victoria. People tend to call me Vicky Supporter. And I lead the area of the PRA within the Bank of England that's responsible for prudential regulation of financial services. So that is everything that's not conduct, that we are responsible for making sure that banks, building societies, insurance companies actually remain safe and sound, and in the case of insurance, they protect policyholders as well, so that they receive the pensions, the payouts when they need them. As Marla said, we are at an important juncture in UK financial services regulation. As again she said, the government is planning to introduce a financial services bill, which, if passed by Parliament, will enact the future regulatory framework. We tend to call it within the bank, but also I believe the term is used by the FCA, the FRF for short. Now, this FRF proposes to broaden the PRA's responsibilities, presenting us with an opportunity to improve our policy making while bringing greater accountability. In what remains of my remarks, I will start by setting out the PRA's vision for policy making and the future regulatory framework. I will then explain what this means for our engagement, particularly with civil society groups. My main point is going to be that engagement with civil society groups makes us a more effective policymaker, and that we are very eager to find ways to improve this engagement. So yes, Marlo, you absolutely do have our support. Now, in terms of our vision for the FRF, so for those that don't know, the government set out in a consultation paper towards the end of last year, in which it proposes that the PRA and actually the FCA become responsible for the technical rulemaking of financial services legislation, and under a framework of statutory objectives and accountability arrangements that Parliament will have to decide in the financial services bill that I talked about. Now, assuming that we do get these rule-making powers, we are keen to deliver them in the following way. We are keen to be strong, accountable, responsive, and accessible. What does that mean? We believe that strong standards, strong rules are fundamental to maintaining a stable financial system and within it, a healthy economy. Financial resilience has been significantly enhanced since the financial crisis of 2008-2009, when at its peak, total government support for the system in cash and guarantees amounted to almost £1.2 trillion. We therefore, at the PRA, have no interest in rolling back the strong standards that we worked so hard to put in place after the financial crisis, and which we believe serve society, because ultimately we're there to serve society, the British public, well. So the first element of our vision is strong standards. Second, as an independent regulator, if again we get this independence through the bill, we must be accountable for how we exercise our powers. We, under the government's proposals, we would be legally accountable to the public, to the voting public, to citizens through Parliament. But we view accountability as broader than our legal obligation to Parliament. I will return to this point shortly. So the second element of the vision is accountability. Third, we want to become more responsive when making policy. Under the future regulatory framework, we could respond faster to changes in the external environment and calibrate our approach so that it is better suited to the UK market. Whatever one may think about our membership, being a member in the EU before Brexit, I mean, one thing it's clear, and I was involved in it, so take it from me, that EU policymaking in financial services was certainly quite slow because of all of the institutional mechanisms that had to be put in place in order to achieve consensus amongst a large number of members of the EU. So we would like to take the opportunity of us being outside of the EU to become more responsive. And last but not least, we want to make a rule book more accessible. The regulatory framework that we have inherited from the EU is highly complex and very fragmented. We want to replace this with a single rule book written in plain English. But this will take some years to complete, so we have been working on some more immediate improvements, such as launching an index that puts in one place all prudential rules which currently sit in various different places, in the statute book, in secondary legislation, some of it in our rules. We plan to publish the index this month, and we hope that it will also increase the ease of stakeholders to keep us accountable. To deliver on this vision of strong, accountable, responsive, and accessible, we must absolutely be accountable for our decision making. Our accountability framework is set by Parliament, and as I explained, we are accountable to Parliament. However, stakeholder engagement is an important part of the existing framework under the Financial Services and Markets Act. And under this Act, we publish consultation papers which explain how we have reached our proposed policy in order to meet the objectives that Parliament sets us. In doing so, we invite input from all our stakeholders to ensure that our reasoning and analysis is robust. Although, as Marlo said, we are legally obliged currently under FISMA to only consult industry, we do invite and we do take into account all input from all our stakeholders. We also publish cost-benefit analysis so that stakeholders can understand how we have assessed the costs and benefits of a given approach. And this helps stakeholders to hold us to account and to challenge our proposals. We also engage outside formal consultations, for instance, through speeches like this and industry roundtables. Now, the government proposes to strengthen accountability mechanisms under the FRF, particularly to Parliament. We welcome the transparency this will bring and will meet these new requirements. But as I noted earlier, accountability is about more than our legal obligations to Parliament and our legal obligations to consult industry. We are committed to increasing our stakeholder engagement as we assume wider responsibilities under the FRF. And I'm delighted to start this discussion today. We have three aims. First, we want more engagement with our stakeholders through each phase of the policymaking process, particularly during the initiation when we start thinking about the potential of making policy in a particular area. And we prioritize which policies we're going to take. And the evaluation stages of the policy development process when we evaluate whether a policy has met its intended aims. Second, we want to engage across different channels, for example, through discussion papers and roundtables. This will increase opportunities for stakeholders to engage with our work at an earlier stage. Third, we want engagement with a wider range of stakeholders. To be properly accountable, we need engagement with voices representing the public, which is the people we serve. However, most of our current engagement, as Marlo said, is with firms or their advocacy groups. We certainly do not discourage this engagement. It's important, but we hear far less from civil society and other relevant groups than we would like to. This is to the detriment of our policymaking process. It is my experience that civil society groups make valuable contributions when they do engage that reflect concerns held by the public. For example, during the FRF consultation, voices from civil society provided input into the debate around the government's proposed new secondary objective on competitiveness, which added important diversity of perspectives to the debate. But unfortunately, civil society groups are not as well represented in discussions on financial regulation, and even more so on prudential regulation, as in my view, there should be. Positive Money has highlighted the access the industry has to decision makers in the recent report. For example, the report suggests that almost a third of Treasury Minister meetings in 2020 and 2021 were with the financial sector and related lobbyists. And the lack of diversity in stakeholder engagement is stark. For instance, look at the Solvency II review. This is an important reform concerning insurance prudential regulation that the government is undertaking jointly with the PRA. In principle, the views of civil society are highly relevant here, given the role of the insurance sector in providing households with important products, such as life insurance, pensions, household insurance, buildings insurance. To take just one example, in 2021, the ABI, the Association of British Insurers, says that there were 20.7 million individual term, whole of life income protection and critical illness insurance policies in force. However, of the 64 responses to the Solvency II consultation, less than a handful were from civil society groups. So to conclude, when our stakeholder engagement is predominantly firm orientated, we can miss out on different valuable perspectives and viewpoints. We want to hear more from civil society groups, and we are committed to increasing this engagement. But engagement is a two-way street. We are eager to hear your ideas on how we can hear from a group like yours more. Thank you very much.
Wonderful. Thank you so much, Vicky. That was really helpful to hear you outline the bank's vision for the FRF. And it's, of course, really encouraging to hear your commitment to accountability as part of that, and that you really value the input of a diversity of stakeholders. And I've seen through the Q&A function that the audience have really appreciated your enthusiasm for that as well. And of course, it's particularly great to hear your appetite for engaging with civil society, and we'd love to keep working with you on that. I know you have to jump off the call now, but we'll definitely feed back to you the conversation today so that we can keep talking about this. Thank you very much.
Thank you very much too.
Brilliant. Well, now it's my pleasure to introduce our panel, who are going to help us explain a little bit more about, firstly, the challenges that civil society face in engaging with financial policy and regulation, and then where the solutions might lie. So I'll just introduce our panelists. We have Fran Boyt, CEO of Positive Money. They're a non-profit think tank campaigning for systemic change to money and banking to support a fair, sustainable and democratic economy. We have Dr. Alan Brenner. Some of you might know him as a former trustee of the Chartered Banker Institute, and he's now Deputy Director of the Centre for Ethics and Law at UCL. We're also joined by Martin Kopak. He's a former regulator, currently a Financial Inclusion Commissioner and Director of Fair by Design, the campaign to eliminate the poverty premium. We were hoping to be joined by Natasha de Terran. Unfortunately, she couldn't join us at the last minute and sends her apologies, but we'll make sure we keep engaging with the Financial Services Consumer Panel, which she sits on as part of this conversation going forward. And thank you. It's great to see that some of you already started sharing some questions. Please do keep adding those, and we'll make sure we put those to the panelists soon. So I'd love to come back to the panel, and Fran, I'm very curious to hear what you thought of Vicky's comments just then. And my specific question for you is, what are the barriers to civil society engaging with the PRA? Why do they not hear from us much at the moment? And what other challenges does civil society face in having a voice in financial services policymaking more generally? So over to Fran.
Thank you, Marloes. It's really great to be here, and thanks so much for hosting this event. I really welcome this conversation and also Victoria's comments. It was really great to hear her reference our report, which I'll just talk a bit more about in a moment. I just want to, I guess, outline the starting point for us, which we don't always talk about, but no matter where someone lives in the UK or what they do for a living, financial regulation has an impact on everyone's lives, whether it's being able to afford a house, access a bank branch, get a small business loan, or address the climate crisis, or ensure big banks don't crash. We all should be able to have a say and engage in regulation that shapes our future and affects all of us. And I think For too long, financial regulation has been seen by most people, regulators, policymakers, and to an extent portrayed in the media as a highly technical subject. That's main stakeholder group should be financial institutions, banks, insurance companies, asset managers, etc., rather than a topic of discussion for the public, which is why it was so welcome to hear Victoria's comments just now, recognising the need to shift that. And, because it seems so overwhelmingly as a technocratic subject, then it is very unusual for regulators to hear from civil society groups such as Positive Money, and in fact is quite a novel experience. So this has to change. And some specifics around the challenges are that, as we've heard, the PRA don't legally need to be engaging with the public or civil society. They have a practitioner panel which is made up entirely of industry professionals, but no formal engagement with civil society. The PRA also have an insurance subcommittee made up entirely of industry professionals, and their consultations aren't very accessible to the public or to civil society groups. So there are things that can be done, which we'll talk a bit about later. But I also just wanted to draw on our report and look at the bigger picture of Westminster, the Treasury, and the wider policy-making process for regulating the financial sector, which is absolutely crucial right now with the Financial Services Bill, as we've heard, and a big risk that this new international competitiveness objective could undermine regulators' ability to act in the public interest. So just a few specifics around the challenges, and we've released a report last month, The Power of Big Finance, which shows that there's basically 5 channels resulting in the financial sector being the most powerful interest group in the country. So just to run through those, they are direct financial ties. We found in 2020 and 2021, the sector donated £15.3 million to political parties. Second, we found, as actually Victoria quoted, close to a third of Treasury Minister meetings are with the financial sector and their lobbyists, far more than any other industry group. Third, there's the revolving doors. So every single chancellor in the last 40 years has taken on a role in private finance after leaving office. That's a very high conflict of interest. And specifically on the members of the PRA and the FCA, Financial Conduct Authority, 70% of all past and present members have worked in finance, either before, during, or after their time. And close to 3/4 of past and present Bank of England decision makers that sit on the committees have worked in private finance, either before, during, or after. So the revolving door is strong, and that's a really key area. The fourth area is we looked at how financial institutions build political support for the sector through dissemination of positive narratives. And in the report, we outline evidence that show these narratives are deeply misrepresent the overall behaviour and impact of the finance sector, which have neglected investment in small businesses. They also have far more corporate legal violations than any other sector. I can talk more about that later if that's helpful. And the final one is just that our economy is dependent on a stable financial system, which does give it further political power. And so you can see, taking all these aspects together, it's very difficult and challenging for civil society organisations to be heard and to challenge the big power of finance. But it's absolutely critical at this junction that we do exist and that we are heard as the future direction of the UK's finance sector is decided. Thank you.
Brilliant. Thank you, Fran. I think you gave some really concrete examples of the challenges that civil society faces. And I know Kit in the chat has been asking about that, but also painted a picture of this, wider systemic problem that civil society face and having a voice in finance. So thank you very much. And do look up Positive Money's report, The Power of Big Finance. It's really, really informative. So Alan, I'd love to come to you next and look at this from a slightly different angle. Now, I know one way that people can more directly engage with finance is as consumers with firms, but that something you've been thinking about is that the relationship between banks and consumers is changing a lot. And I'd love to hear how you think that is impacting the ability for customers to have a voice in financial services?
Many thanks, Marlies, and good afternoon, everyone. We have a changing structure to community banking, and we have this issue of banks, high street banks, being embedded in the community, but that's changing, as you know. The banks are moving online. They are closing branches at an alarming rate. There were in 2012 some just over 13,000 branches. We're now down to just over 8,000 branches. It's falling at what, 35%. That's going to continue. At the same time, we've got lots of challenger banks online, and that's all a good thing. They all tend to have the same look and feel, and as the, let's call it the incumbent banks move online, they will adopt this level of innovation as well. Again, all good. But at the same time, branches are closing, and the issue of branches closing is that these are the high street banks currently, and as the name suggests, they are embedded in the community. They engender a high level of stability and familiarity in the area. And as each branch closes, along with well-known retail shops, post offices, etc., a bit of that community is destroyed. And that sense of community starts to evaporate. We can't turn the clock back, nor should we try to. But this loss of community may result in these areas sort of descending into a slough of despond. And it doesn't really avail of the high street banks anything to merge into this morass of the generality of online banks. They become nothing special. They lose their special identity within each community, as the community itself loses its own identity. As the banks close, their links with the places slip. They employ no local staff. They have no presence. The customers become bits of data. The children of the bank staff are absent from local schools. They have no engagement with local festivities and celebrations. As they go, they have nothing to contribute to that particular area, that particular community. As I said, the clock can't be turned back. What is to be done? Well, one possibility is the nature of the banks change themselves, and they do retain some sort of high street presence. Okay, it'll be much, much smaller. There'll be fewer staff, and the nature of what they do in these bank branches will no doubt change. But it's a key part of the bank's link with people and society. And it's in the bank's own interest as well. As they lose their own local identity and join, let's call it the generality of online banking, when the next financial crisis comes along, and there will be another one, there always is, okay, the state will definitely rescue the depositors, but it may not rescue the actual banks themselves. And it is a risk that the banks face of being dissolved and allowed to expire, largely because of neglect. And this neglect is translated into the destruction, the failure of the community. And if we don't have this sense of community, then the banks themselves, to a certain extent, lose their reason to exist and become like everyone else. Thank you very much.
Thanks so much, Alan. I think what you've described is something that everyone can really relate to, is the challenge of local branch closures. And it really is such an important part of the context for this discussion as well, because it just compounds the importance of thinking about how our policy and regulation is accountable to the public and how civil society can engage. So thank you very much. And Martin, I'd love to come to you next as well. And I think we'll come back to thinking about regulation and just thinking about the future regulatory framework, which I know you've been working on at Fair by Design. What problems have you identified in what the government's proposed so far from the perspective of ensuring that everyone, especially those least well off, have a voice in financial services policy making?
Thanks, Marlous. So I guess from our point of view, there's two main points here. One, a real lack of anything that is around getting the basics right. And what I mean by basics right is that everybody has access to products and services that are suitable for them at a price that they can afford. The second piece I would say is that there are no new ways proposed which will address the woeful imbalance between consumer representation within regulation and in terms of financial services. I'll just expand a little bit on that. So I think it's just absolutely remarkable and kind of beggars belief, actually, that despite financial services being essential to everybody, the FCA does not even have to consider, never mind address, the needs of the excluded in society. And you know, you could just talk to an average person on the street here. I think most people would be quite astonished that the financial services regulator does not even have to consider this. So as you know, Marlous, we're calling for financial inclusion, must have regard for the FCA, but I think I'm supposed to talk about that later, if I remember rightly. I just want to put this into some context here. We are undergoing what many call the great risk transfer. So the state is saying to people, look after yourselves, be responsible, protect yourselves and your family, think about your future, have pension products for the future, have personal protection insurance for you and your family if things go wrong. You manage things, be a good citizen and be a good consumer. Well, what happens if the market doesn't want you? We can't get away from the fact that poorer people are just not that attractive to financial services providers. And we can have as many fintechs as you like, and people like me can rock up and give the problem statements around poorer people not being well served. But generally, I'm told they're not the issues they want to look at because they work within a market environment. And we cannot expect firms to actually jump on board and say, we want to provide things at a loss. So that means the regulatory environment and social policy makers need to get a real grip here. Financial services firms are producing essential services. They're called essential for a reason. We all need them. So thinking about that, I also point to the fact that markets really are amoral, but because we're expecting consumers to use markets more themselves for basic essentials, we are asking markets to do moral things. And that's why we need financial inclusion to be the bedrock of a new financial regulatory system. And what I've noticed for many years working inside a regulator and outside is that trickiest problems are those problems that involve a little bit of social policy and a little bit of regulatory policy. Let's play the ping pong, the hot potato between Treasury and the Financial Conduct Authority. I just want to also mention something around the trickiest issues too, often involve price. And everybody talks about the consumer duty, the consumer vulnerability guidance. That's the answer to everything. They are good pieces of work. But when it comes to poorer consumers, basically people have a low income, it doesn't touch that. Yes, it will do things around helping people who are fluctuating in and out of vulnerability. But the core issue about some people just being poorer is not an issue that is being tackled by that. And that is often given as a reason why the FCA does not need to have a remit around financial inclusion. I can give you a few more examples if I've got time, Marlous, or I can wait till a bit later.
Maybe we'll bring those in the Q&A. But thanks so much, Martin. And I think you've, really explained why it's so important that we don't just think about people as consumers, because lots of people are actually currently excluded from financial services, and yet we still need to make sure they're heard and represented within policy making. So I think, our panelists have really explained why things aren't working well enough at the moment in terms of civil society having a voice in financial services. And it'd be great now to move on to hear some ideas for solutions. And so, Fran, if we come back to you, I'd love to hear, what measures would you like to see Vicky and the PRA take up going forward, and potentially any other regulatory institutions as well, like the FCA and Treasury, in order to make sure they really hear from civil society?
Thanks, Marloes. Yeah, and just really want to welcome Martin and Alan's contributions as well. It's like such a important discussion that we're having right now, and it is quite a critical time. But I guess the good news is there are lots of changes that can be made relatively quickly if there is the kind of will there, and hearing from Victoria, it sounds like there is, to ensure a balance of input into the financial services policy making at this critical time. So, you know, just very simply, the PRA, you know, must be kind of legally bound to engage with civil society and the public. It needs to be shifting its membership. It could do this without being legally bound. Tomorrow, it could shift its membership of its practitioner panel to include 50% public interest representatives. And, you know, a duty should be placed to ensure that it isn't just financial firms that are that they're engaging with, and we could have a new statutory panel with the resources to enable public interest groups to participate. And more widely, on the other issues I was talking about earlier, we've outlined 12 recommendations in the report that look at transparency improvements, tackling conflict of interest, slowing the revolving door, and establishing a regulatory framework that can work in the public interest, and reduce our dependence on private financial institutions, which is critical for a balance of input. So we recommend extending the lobbying register to cover in-house lobbyists in addition to consultant lobbyists. We recommend on conflict of interest, banning private sector second jobs for MPs. On the revolving door, there should be a statutory body to oversee more stringent rules on cool-off periods and lobbying bans. We do need to slow down and hopefully eventually stop this revolving door if we really want fair policy making. And on the regulatory framework, you know, we want the government to discard its plans to introduce an international competitiveness objective and instead introduce objectives on financial inclusion. As we've heard from Martin, it is not in good shape at the moment, and alignment with the Paris Agreement. This is really the big battle, I think, at the heart of the future of financial regulation in the UK. So, you know, we do welcome recently, there's been an announcement that the Treasury Select Committee, the group of MPs that scrutinise the government, the Bank of England and regulators, has launched a subcommittee that specifically to scrutinise these huge amounts of legislation that's going to be passed or brought in, and, you know, and look into the into what it's going to do for the future of financial services here. And this is the perfect opportunity to really show a commitment to have a balance of input from civil society, and not just to do, you know, what we have seen a lot of, which is to have that imbalance which favours the industry over civil society voices. So that subcommittee is happening, and we hope that it will be an avenue for civil society to have a voice.
Brilliant, thanks, Fran. And I just want to remind people, do submit your questions, because we'll try to come to a few of those in a moment. And Martin, when I come to you, I'd like to bring in one of the questions actually. So I'd love to hear from you what opportunities you think the upcoming Financial Services and Markets Bill presents for this agenda. I also noticed that you responded to Greg in the chat about whether we might be able to learn from the EU and funding they provide to civil society organisations there. So it'd be good if you could bring some thoughts on that in too. Thank you.
Sure thing. So in terms of opportunities, I did mention that Fair by Design and many third sector organisations, from Citizens Advice to Scope, but also corporates like L&G Insurance, are coming behind a new must-have regard for the FCA. And let me give you an example of why it's so important that we need this must-have regard. At the moment, the biggest part of the poverty premium, the extra costs people pay for essential services, is insurance. And many people are penalised in insurance because of where they can afford to live, because postcodes calculate the determining price for car insurance, for example. And car insurance is something which is compulsory. We spend all our time going to Treasury saying this is an issue, Treasury saying we need more data. The only organisation by law who can get the data is the FCA. Go to the FCA. The FCA say, well, this is price, it's kind of social policy. Go back to the Treasury. And then we might get sent to the Competition and Markets Authority, maybe the Equality and Human Rights Commission, then back to the FCA. And if there's one thing in terms of a systemic change that had financial inclusion problems can be dealt with in the future, the FCA is required to at least consider, we're not asking for much, at least consider financial inclusion, and then publish a report once a year to say, this is the state of the market, this is where we can act, this is where we can't act. And then it's really plain where social policy needs to come in and where the regulator needs to come in. Because at the moment, it's just this grey mess. And I've been working in the field for about 20 years, and it's been the same since then. In terms of the question that came in about learning from the EU, reflecting on my experience of consumer engagement, and I worked at the FCA for quite a while on consumer engagement, it's really quite astonishing how poorly resourced consumer organisations are. And I remember once at the FCA doing some lunch and learn sessions and saying to people, you know, from across the organisation, how many people do you think Citizens Advice has working on policy across the UK? Somebody said 100 people. And I had to say, it's Sue Edwards, you know. I think not even people within the system don't understand how poorly resourced these organisations are. We are calling for out of the FCA levy to be some money given to consumer organisations to help build their capacity. Because at the moment, consumer organisations will concentrate on crisis intervention because that's what's coming to their doors, credit, debt. If you're talking long-term competition issues or even things like insurance outside of that, it's slim pickings. We need properly resourced. And just quickly as well, I think the consumer panel is great at the FCA, but let's have another panel of people with lived experience. And also, come on, it's 2022. We need people in regulators and in government to actually meet people in poverty. And they need to be at the table coming up with some solutions. I'm going to put in that in the little sidebar our inclusive design kit. It's a guide for regulators and policymakers to actually have co-designed solutions, because people who know what's best for them are the people actually in the community we're supposed to be designing solutions for. Thank you.
Brilliant. Thank you very much, Martin. And I've seen in the Q&A that Fatima from Economy has raised the question of the need for diverse civil society voices. And I think through your lived experience panels, that could be one way to achieve that. But maybe we'll come back to that question later. And then, Alan, I'd like to come to you just with my final question before we close for Q&A. And I was wondering, just, you know, based on everything we've heard today, how do you think professional bodies and industry professionals should be thinking about supporting civil society to have a greater voice in finance?
Thanks, Marlos. Before I go on to that, can I just pick up a very important point that Fran mentioned, which is the proposal that the regulators have a secondary objective for international competitiveness. This is a very bad move, and it's very difficult as a regulator, prudential regulator, and I used to be one a long time ago, it's about 4 regulators ago, to try and balance out as a prudential regulator this these conflicting and highly likely to be conflicting requirements and objectives between the stability and solvency and liquidity of your organisation that you're supposed to be looking after, and trying to ensure some form of international competitiveness. These are very dangerous, and it's quite possible that if this is instituted, that as I talked about earlier on, this might be one of the reasons why we have the next financial crisis. We'll see. Going back to the particular question, I think that the professional bodies and industry professionals have a particular role in 3 elements. I think one is to do with ethics and culture, and as you said in the introduction, I'm Deputy Director of the UCL Law Centre for Ethics and Law, and so I have a so let's call it a very keen interest in this area. No system of regulation, no system of supervision will work if the organizations that are subject to that supervision do not have the right culture within the organization, and the individuals have the right ethics. Okay, everything else will fail, and that's well attested. And I can, well, I have a whole book on this. And that's one of the elements for, say, professional bodies to highlight, and it should be core. I think it is core to the regulators. The next one is training and competence. There is a view that part of the financial crisis was due to, let's call it, wicked people who were inspired by greed. Well, that's one view. It's another view, they were just incompetent. They didn't know what they were doing in many cases. So certainly people who are trained and are properly competent is essential to financial services. And that's an area of particular interest, both to, well, a number of people, the professional bodies, the regulated firms themselves should have a keen interest in this, the regulators themselves, and individuals operating within regulated firms should see it upon themselves as the only way they can do their jobs properly if they know what they're doing. And the final one I was going to mention is what I call professionalism. And that goes back to my time at the Banking Standards Board and setting that up. And the concept that individuals within regulated firms have, let's call it a higher level of accountability, not just to the organization they're working for, but to their profession that they belong to. Okay, so this should be the case certainly with, let's call it, the established professions of accountants and lawyers and so on, but also to bankers, people working in financial services, and it's generating this level of professionalism that it's important both for professional bodies, the regulated firms, the regulators themselves should have a keen interest in this, and again, the individual in terms of their own, let's call it, career development, and also their own ability to have a reference point, a compass by which they can act on their day-to-day work inside a firm. Thanks very much.
Fantastic. Thank you so much, Alan, for those pointers, and I hope everyone on the call found that really useful and inspiring. And that leads us now into the Q&A, and I've just been having a look at the questions, and I think there are potentially three outstanding points which I'm just going to read out, and then I'm going to invite Fran, Alan and Martin to respond to one of the questions that they'd like to. So I think a first question is around there's a few kind of more innovative ideas that have been shared around engaging the public in financial services regulation. So for example, through citizens' assemblies or new social platforms. So do you have any views on the value of those? Should we be exploring those? There's a second question around the importance of making sure that any civil society input is diverse. There are so many different types of civil society organisations, from large NGOs to grassroots community organisations. How do we make sure that we don't just hear from large NGOs, for example? And then a third question is around the issue of the revolving door. And should we be ending that completely? Because that could actually limit the amount of technical expertise within financial regulation. So I'll go to Fran, Martin, and then Alan. If you'd like to just pick one to answer, that'd be great.
Man, I had to give very brief.
Go on, very brief.
I mean, just yes to citizens' assemblies and social platforms. I mean, I think all new innovative mechanisms to engage the public is necessary when the starting point is so ground zero. In terms of different voices, you know, I think as Martin's kind of eloquently articulated, like we need people with lived experience to be involved in design. So like, first of all, we need the FCA to have a financial inclusion mandate, but then we actually need to make sure that we're bringing in those to help design. You know, in conversations we've had with with the bank and others on a potential central bank digital currency, which we think could help to lay the foundation for more financial inclusion, having a universal risk-free means of payment, kind of separate and safe from the financial system. Then, you know, part of the most exciting about that is financial inclusion, and that's quite novel to them to be thinking about. So that needs to change. And then on the revolving door, I think this is about conflict of interest, right? So when there's clear financial conflict of interest between you know, a chancellor planning to go and work in the finance sector, that kind of revolving door is clearly damaging our democracy. This isn't about saying that, you know, somebody from the government can go and work and earn a pretty mediocre salary at a non-profit in civil society. This is about, you know, quite clear threats to democracy and who has a voice at the table. And I think we've quite clearly outlined the financial ties, the lobbying interests, and the revolving door that is part of the issue in terms of who has a voice when it comes to financial regulation.
Thanks, Fran. Martin.
Thanks. Brilliant questions. We believe the biggest, why there exists things like poverty premiums and people on low incomes having such a difficult time in financial services. The root cause of this are a number of things. A disconnect between policymakers, regulators' experience and people with lived experience. A belief that competition meets all consumers' needs. How often have we heard empowered consumers drive the market? I think we need to realise that actually we need a properly regulated environment, and also a lack of ownership and joined up approach between government and regulators. In terms of the different ways to engage, I think the missing piece at the moment is people who make the decisions directly engaging with people not like them. You can't, too often you get a researcher in a regulator, for example, saying, right, we're going to design the questions we want asked related to the remit of our organisation. Go out, ask those questions, come back, job done. Actually, are they the right questions? Shouldn't we be spending time with people to say, oh, look, what's your life like? And I am sure that actually people with lived experience of different vulnerabilities and incomes would really be able to advocate very well for themselves if they were ever mixed with people who actually make decisions. It's that gap between the people who do engagement in a big organisation and people who make the decisions. And just in terms of having plurality of voices, not just the big ones, the big organisations, absolutely agree. But just thinking about Vicky saying earlier, they want to engage more civil society organisations. Well, if you want to engage more, you've got to put a lot of resource into it as the regulator. You've got to change the way you do things. And that takes funding, but it also takes culture change. Please, everybody, do read our Inclusive Design Guide, which is built for regulators to do this.
Fantastic. Thank you, Martin. And Alan, over to you.
Thanks so much. I think there's two sort of distinct elements to this. One is to do with the political legitimacy of the regulators, and the political legitimacy of, say, the prudential regulator is actually very simple. Okay, it's based on financial stability, no crises, and to a large extent, no bank or major financial services failures. I know the mantra is that a zero failure rate is not one of the drivers of the PRA, but in practice, part of their financial legitimacy, their legitimacy as an organisation, is based on no major failures at all. There's a separate element that applies to the conduct side. And the conduct side could be described as the regulator is a middle-class regulator for middle-class people. It's as I think Martin alluded to, it's people like us regulating people like us. Okay, and there is a large portion of the population is excluded because of that, or there's a risk of that large portion of the population being excluded. There are all sorts of measures that you can take to try and alleviate that, but again, based on my experience, it comes down to an issue of senior focus, but also organizational focus. There needs to be within the FCA, and probably also within the Bank of England as well, a unit, let's call it a resource unit, which has as its sole focus, okay, issues that relate to people that currently are or might be excluded from what else goes on within the regulatory environment. And this unit needs to have a voice, and would have a voice if the senior management will it so, to make certain that the issues, the points of view of the let's call it ignored, the disenfranchised, is heard at the top table, and action is taken. There is a danger that this unit becomes a form of paternalism. We know best for you, but again, done properly with the right people, I think that that risk can be ameliorated. Thank you.
Thank you, Alan. And wow, I can't believe the hours just sped by, but we are going to have to close now. At the top of the call, I said that the purpose of this call was to try and raise awareness of the need for civil society to have a voice in financial services and its regulation, and to generate ideas and support for that. And I think we've definitely begun to do that, which is fantastic. It's so good to hear from the PRA that there's a real appetite to engage with civil society, and thank you so much to our panelists for taking us through understanding, why that's not happening at the moment and what more can be done to increase the voice of civil society. I think we've heard a range of ideas which have spanned issues like the need for resourcing, the need for culture change, the need for experimenting with new formats of engagement. So I hope you'll agree this has been a really thought-provoking event, but it's also going to be an action-provoking event. We're going to be sharing these ideas with the Bank of England and other regulators, and we're really keen to continue the conversation with you as well. We'll also be picking up the conversation with the Financial Services Consumer Panel. Obviously, Natasha wasn't able to join us today, unfortunately. So if you would like to help share this conversation, please do pass on the recording after the event. We'll be emailing that round. And then I'd just like to say some quick thank yous. So thank you so much to Vicky at the bank and to our panelists, Fran, Alan and Martin, for sharing your insights, and also all your work standing up for the public interest in financial regulation and finance. I'd also like to thank the CBI, particularly Emma and Matthew, for your leadership in helping to make this event happen. And also thank you to our audience for joining us. Thank you for your brilliant questions. I really hope you enjoyed the event. Please share any questions or feedback with us, and we hope to see you at a CBI or lab event soon. Thanks, everyone.